Welcome back to CryptoNewsOfficial. Have you ever wondered why Bitcoin's price tends to surge every 4 years? Well, the answer lies in an intriguing event known as the Bitcoin halving. This event, which occurs approximately every 4 years, is a mechanism built into the very code of Bitcoin. It cuts the reward for mining new blocks in half, effectively reducing the rate at which new Bitcoin is created and introduced into the economy. Now let's take a quick trip down memory lane. Bitcoin has undergone 3 halving events so far in 2012, 2016, and 2020. Each time, the halving has led to a significant increase in the price of Bitcoin. This price surge is mainly attributed to the reduced supply of new Bitcoin, making each existing Bitcoin more valuable. The next Bitcoin halving is expected in 2024. Are you ready for it? The history of Bitcoin halving. Bitcoin halving has a rich history that dates back to the creation of Bitcoin itself. The concept of Bitcoin halving was embedded in the Bitcoin protocol by its mysterious creator, Satoshi Nakamoto. This ingenious mechanism was designed to control the supply of Bitcoin and protect it from inflation, much like gold. Once every 4 years, or approximately every 210,000 blocks, the reward for mining new blocks is halved. This event is known universally as Bitcoin halving. The inaugural Bitcoin halving took place on November 28, 2012. Back then, Bitcoin was a relatively new phenomenon, an unknown digital entity that only a handful of tech enthusiasts truly understood. With the first halving, the mining reward dropped from 50 Bitcoins to 25. This was a significant moment in Bitcoin's history, marking the first real test of Satoshi's economic experiment. Fast forward 4 years to July 9, 2016. The world witnessed the second Bitcoin halving. This time, the reward fell from 25 Bitcoins to 12.5. Bitcoin had gained more recognition by this time, and the anticipation surrounding the halving was palpable. The market responded positively, and the price of Bitcoin started a steady climb. Then came the third Bitcoin halving on May 11, 2020. Amidst global economic uncertainty, the mining reward was reduced yet again, this time to 6.25 Bitcoins. The event was met with great fanfare, and Bitcoin's price skyrocketed in the months that followed. Across these halvings, one thing remained consistent: the anticipation and excitement in the Bitcoin community. Each halving event brought with it a sense of novelty, a renewed interest in Bitcoin, and invariably, a surge in its price. Understanding this history is crucial to anticipating what might happen in the 2024 halving. We can't predict the future with certainty, but history often rhymes. So let's keep our eyes peeled for the next chapter in this fascinating Bitcoin halving saga. The mechanics of Bitcoin halving. But how does Bitcoin halving actually work? You may ask. Well, to understand this, we need to delve a bit into the technical side of things. Bitcoin is created through a process called mining. Miners use powerful computers to solve complex mathematical problems that validate transactions on the Bitcoin network. Once these problems are solved, or blocks are completed, miners are rewarded with a certain number of Bitcoins. Now here's where the halving comes in. Initially, when Bitcoin was first launched, the reward for completing a block was 50 Bitcoins. However, Satoshi Nakamoto, the anonymous creator of Bitcoin, designed the system so that this reward would be halved approximately every 4 years, or specifically, every 210,000 blocks. This event is what we refer to as Bitcoin halving. Why does this happen? You might wonder. Well, the purpose of this halving process is to control the supply of Bitcoins and prevent inflation. By halving the reward, the rate at which new Bitcoins are created is slowed down significantly. This means that while the demand for Bitcoin may continue to grow, the supply won't keep up, creating a sort of digital scarcity. Now let's bring this concept home. Picture this. You're a miner, and you've been working diligently, mining those blocks. Suddenly, the halving occurs, and your reward is reduced by half. Instead of receiving, say, 12.5 Bitcoins for every block you mine, you now receive only 6.25. This reduction in the reward not only impacts miners, but also the entire Bitcoin market. With fewer new Bitcoins being generated, the supply decreases. If the demand remains strong or even increases, this could potentially drive the price of Bitcoin up. In essence, Bitcoin halving is a deflationary event. It's a mechanism that's built into the very fabric of Bitcoin's design to control its supply and maintain its value. This halving process is integral to Bitcoin's design and its deflationary nature. Bitcoin halving and price surge. Does Bitcoin halving cause a price surge? Let's delve into this fascinating question. Historically, Bitcoin halving has been associated with a significant price surge. In the world of Bitcoin, halving events are like clockwork, occurring approximately every 4 years. And it seems that around each of these milestones, the price of Bitcoin takes a leap upwards. The first halving in 2012 saw Bitcoin's value rise from approximately $13 to over $1,000 within a year. The second in 2016, Bitcoin went from around $600 to nearly $20,000 by the end of 2017. The third halving in 2020 also witnessed a spectacular price rally. But why? Why does Bitcoin's price tend to rise after a halving? The answer lies in the classic economic theory of supply and demand. Bitcoin's halving events effectively cut the rate at which new Bitcoins are created and released into circulation. This decreases the overall supply. Meanwhile, if demand remains constant or increases, the price will naturally rise. It's a bit like a digital gold rush, with miners scrambling to get their hands on an increasingly scarce resource. Another theory suggests that the halving events generate substantial media attention, which in turn attracts new investors to the market, further driving up demand, and with it, the price. However, it's essential to note that while the correlation between Bitcoin halving and price surges is compelling, it does not necessarily imply causation. Many factors influence Bitcoin's price, including market sentiment, regulatory news, technological developments, and broader economic factors. Moreover, it's worth noting that the crypto market has matured significantly since the last halving. Today's market is far more diverse, with a myriad of cryptocurrencies and a much broader investor base. So while history suggests that Bitcoin's price may surge following the 2024 halving, it's far from guaranteed. However, remember that past performance does not guarantee future results. What to expect? So, what can we expect from the 2024 Bitcoin halving? Well, the future, as they say, is a book that's yet to be written. However, we can attempt to sketch a rough draft based on historical trends and market patterns. The past Bitcoin halvings have typically been followed by a substantial increase in Bitcoin's value. This is largely due to a decrease in the supply of new Bitcoins entering the market, coupled with an unwavering or even increasing demand. But remember, correlation does not necessarily mean causation. There are a multitude of factors at play here, and the Bitcoin market is influenced by more than just its halving events. Global economic conditions, regulatory changes, technological advancements, and shifts in investor sentiment can all dramatically impact Bitcoin's price. As we approach the 2024 halving, there's no shortage of predictions and speculations. Some anticipate a surge similar to previous halvings, suggesting that Bitcoin's value could reach unprecedented heights. Don't get swept away by the hype, but also don't dismiss the potential impact of this event. As always, conduct your own research, stay informed, and make investment decisions that align with your personal risk tolerance and financial goals. The 2024 Bitcoin halving is a potentially significant event, but as always, in the world of cryptocurrency, nothing is certain. Key takeaways. So what have we learned about Bitcoin halving? Let's recap. We've delved into the intriguing history of Bitcoin halving, tracing its roots and understanding its purpose. We've also dissected the mechanics behind it, how every 4 years, the reward for mining a new block in the Bitcoin blockchain is halved, a process that ensures the digital scarcity of Bitcoin. We've looked at past occurrences and how they've had a significant impact on Bitcoin's price, usually leading to a price surge due to the reduced supply of new Bitcoins. And finally, we've explored what to potentially anticipate from the upcoming 2024 halving. While speculating on future price trends is a risky game, the historical pattern does offer some interesting insights. Remember, while Bitcoin halving is an exciting event, always do your own research and make informed decisions when it comes to your cryptocurrency investments.